Hey, what's up? Today we're going to talk about what I like to call smart debt. Now, what is debt? Debt is something that you owe someone. It is something that you've borrowed and you need to return. Now, this can be from a family member, it can be from a bank, and it can be from anyone else. Before we get into smart debt, let me tell you what I think is the worst kind of debt, and that is definitely either credit card debts or borrowings from your family. And the reason why I consider these two to be the worst kind of debt is because it is so easy to accumulate but so difficult to get rid of when you're in a financial pickle. Borrowings from near and dear ones obviously break relationships if you're not able to repay them, and credit card debts can really snowball into a massive amount before you even realize it. Now, of course, you can accumulate debt in so many other ways, like borrowing from your employer, borrowing from the bank, and so on. And I wouldn't recommend any sort of debt if you are in that financial position. If you're earning in the hundreds of thousands every single month and you have a very good cash flow, I highly recommend that you don't get into debt at all and manage it with your cash. But for most of us, this is not the case. We are mostly salaried people and our salaries might be either low or in the mid range. And for those people, I say utilize the smart debt method. Now, the smart debt method is not for those of you who are just looking for cash. You need to find alternate ways to make money. You need to earn more, and I have a lot of different videos on how you can actually earn more. But this is not for those people. It is for those people who have a steady income but would like to use their cash for savings and other investments. I would recommend that you use this only for very specific use case scenarios, like if you would like to buy a car or a property. Now, I'm not at all suggesting that if you want to buy a car or a property, just go out and take a loan. It requires a lot of planning, it requires a lot of budgeting, and it requires smart financial thinking. Let me give you an example. Let's say you want to purchase a car that's valued at 100,000 dirhams. Now, you would require a 20% down payment on this, which would amount to 20,000 dirhams. Now, you'll have to take a loan on the balance of 80,000 dirhams. What I would suggest is that you do not take a loan for that 80,000 dirhams if you don't have assets to back up a certain portion of that. You might have heard that a brand new car depreciates 20% the second you drive it off the lot, which means your car is now worth only 80,000 dirhams. But if you take a loan for 80,000 dirhams and you need to sell it off quickly, you need to be able to pay off that loan. Now, remember, when you take a loan, they're going to charge you a majority of your interest upfront and your principal keeps rolling to the back end of your loan period. So that means if after a year you've taken a loan of 80,000 and you need to sell off your car, you're going to be in a financial problem if you need to get rid of it quickly. So what I am suggesting is that you need to have 50% of the cash value of the car in reserves so that if you are in such a situation, you can quickly sell the car at whatever price you get and you would still be able to pay the balance of the loan amount very easily without getting you into a financial problem. And the same principle applies to purchasing a property as well. Let's say you're purchasing a property for 1 million dirhams. You probably paid 250,000 dirhams upfront, which leaves a loan amount of 750,000 dirhams. Now, imagine your property value stays around the same or has dropped down in value a little bit and you need to get rid of the property quickly. You are not able to pay off the bank loan at that moment and you will be in a financial problem. So what I again suggest is that keep some money as backup, wherein you will be able to sell the property at a reasonable value quickly and you will have enough cash reserves to be able to pay off the bank without stress, and that way you will not have a problem in the long run. And of course, why I call this smart debt is because you need to have that reserves where you will be able to invest that money and earn more out of that cash balance that you have than the interest that you will be paying the bank, because the interest rates at the moment are quite low for a long-term loan. I hope that was clear. If you have any questions, let me know in the comment section down below. My name is Kenneth. You're watching Boss Your Money. Don't forget to like and subscribe to the channel. I'll catch you in the next one. Take care.